Okay, just gone 11. I think we should get going. Not very much going on this week, as you might imagine, going to be running up to towards Christmas. But I've got a bit of news to cover, and then I'll be talking to Craig Baker of. Oh, we've got the sound on. We've got Craig Baker of Alliance Twitter. So let's get going. So three things that I pulled out for news-wise: Ecofin, AVI, and Taylor Maritime. And we'll start with Ecofin US Renewables. It's not a great story. We've talked about this before. The NAV has been falling away. The share price went out to a discount back in 2022 when interest rates started to rise, and it's now not very big, only 57 million market cap, and that's on a 36% discount to the last NAV. So for a whole year, it had a strategic review that finished on the 9th of September. And it turns out they spent $2.5 million on that. They decided to adopt a managed wind down process. And they published an NAV which showed a fall of 18% based on the shift over the quarter to the end of June. And they blamed that on falling valuations in the US solar market generally. When they published the interim results, even though they said they were going to adopt managed wind down, these were still prepared on a going concern basis, so no provision for cost of realising the portfolio in there. And the NAV then was just shy of $90 million, and there was quite a chunk of debt, about $79 million worth of debt set against that. But they did say that there was a deal in the works. And on 13th of December, so today, they have announced that deal. So they're selling a big chunk of their solar assets to an outfit called True Green Capital, who are not affiliated with the manager. It is completely arm's length transaction. There's quite a lot of costs and tax and stuff to set against that. So you can see that 38.4 drops to 34.5 million. It's 5 portfolios of solar, or 5 solar assets rather. And these were valued at 63 million in those accounts. But then they got $15.6 million in from investment trust credit financing against that. So that drops the value anyway. So they revalued them at 51.9 million on 27th of November. So that's what the value should have been. But they've sold those, as it says there, for 38.4. So it's quite a big discount to the valuation, and even bigger if you take off the cost. So by knocking off about a third of the value, which kind of suggests that discount that it's trading on is about right. And if anything, it may be a bit too narrow. They're going to use the money to pay down the remaining balance in the revolving credit facility. The NAV falls to 53 cents. And basically, the board says this is the best we could do. We couldn't get a buy for the whole portfolio. And it's quite an extensive process, and this is the offer they came up with. Obviously, that was all being done in the run-up to the election. The environment for US renewables assets is not great in the wake of Trump, and that might have affected things. Anyway, in all of this, they still haven't actually got permission from shareholders for the managed wind down, and that may be why they didn't go down the route of changing the valuation basis. And so that needs to be done. That needs to be done in a hurry. They want to complete on this deal in Q1 2025. So I'm thinking, as we haven't seen it yet, that they'll be calling a meeting in January to get that approved. And then once that's done, they've still got to sell the other assets. So they've still got the wind farm, Whirlwind, which is the thing that got hit by the tornado. And that was the main reason why the whole thing got knocked off course. And also they've got 2 more solar projects to sell, Beacon 2 and Beacon 5. So we'll see what happens, but I wouldn't suggest that anybody rushes into this thinking they've got a bargain. AVI Global, I just wanted to point this out because I just think that what they've just done here is genius, really. It's a big fund now. over 1 billion. It's on an 8% discount. I think that could be narrower still, even though it has been coming in, as you can see here. And it's got a bit of a yield. So they started buying this thing called D'Ieteren, which is a Belgian holding company, a while ago. But they just think it was just generally cheap. But then D'Ieteren announced that it was going to do a sort of transaction to facilitate a reorganization of the interests that the controlling families have in the company. So this is a company that owns Autoglass, and that's quite a sort of very cash generative business. They've got basically windscreen repair centres under various different brand names all over the place, just not just in the UK, and across the whole of Europe and that quite the world as well. Anyway, they paying out a €74 per share special dividend. And the retail investors thought, hang on a minute, we're going to get massive hit to our income tax bills from this. So they were selling before the thing went ex-dividend, and AVI Global was basically hoovering up stock at depressed prices. And you can see this here. So this is just a chart of the share price and volume over the past year. And volume's up that high all the way through the year, and the share price is steadily climbing, in line with AVI's view that the whole thing was undervalued anyway. And then when they announce the deal, the share price drops and falls by quite a chunk, and the volume starts picking up. And this is the retail investors selling, and this is the main period when AVI was picking up at stake. And then when we get to right at the end of the chart here, the shares actually get an ex-dividend. But that blue bit here, if you add the dividend back, you can see that the value of the shares plus the dividend is actually quite a long way higher this high here. And that just shows you just how much money AVI has made out of this deal. So trying to crunch some numbers on it, it was 9.6% of the fund at the end of October, which is about £100 million worth, or about 639,000 shares in D'Ieteren. It bought a few more. The share price at the end of October was 198.5, and that was the sort of depressed share price. But if you add together the share price now with the special dividend, you come up with 243.3. The dividend, they actually announced in December they're going to get the dividend of 46.9 million euros, and they do have to pay a tax on that. It's nowhere near as much as it would be if you were a retail investor paying income tax. It's about 10%. So altogether, then that's worth about 130 million. So you can see they've made a decent chunk of money out of this, and it just shows you, I think, the value of looking at these situations, these unusual situations, and then seeing if there's an opportunity here. And well done to them, I think, for that. They've treating this as capital. They've talked to their accountants and their auditors, and it's been signed off already. So it's not going to be a special dividend from AVI Global. It's just going to be round up in the NAV gain. Last one, Taylor Maritime Investments. I've got a bit of a soft spot for this, but and it did quite well, really, to start off with. And then, even though the NAV's been going up, the share price has been coming off, and the discounts got really quite wide. And I don't really understand why that's happened, but it's ended up on a discount of about a third, 33.7%, despite the fact it yields 8.2%, which is massive. What they've done, they've been doing various deals over the past year or so, and the big one was that they bought this thing called grind rod chipping, and they've been gradually increasing the percentage that they owned of that, and they now own 100% of it. And it's changing the way that the company works, and so they've decided to stop being an investment company now and to become a normal company. So they need to get shareholder approval for that, and it's a change of the listing. They're planning to have all that effective in February, and it really reflects the fact that it's become more of a trading business. So they basically used to be just a vessel owner that leased out ships, Now they're going to be chartering some in and leasing those on and trying to make a margin out of that. So it's a whole thing sort of trading. And yeah, that all makes sense in terms of what they're trying to do. They're going to pay out a special dividend. So they're paying 8 cents per year at the moment in quarterly amounts of two. So 2 cents a quarter. They're going to pay an extra 4 cents this quarter as well. And because they changed from an investment company to a trading company, it changes the whole way the accounting works. So a big chunk of when we're looking at NAVs is that the NAV based on sort of fair value of the assets, and that's done on looking at the future cash flows that are going to come from that asset and discounting them back to the present day. And that's the way that infrastructure, renewable energy, and so Taylor Maritime too, valuing their assets. But instead, they're going to shift to a situation where you just put in the book cost and then you depreciate it over time, which actually I think is not as good a way of valuing these things, but nevertheless, that's the way they're going to do it. They can stop making NAV announcements. So the NAV is going to drop because of the way they're going to do that. But they're going to stop making NAV announcements anyway, and their whole emphasis around NAV goes or drops away because they're not investment company anymore. And it's also going to be a change to the way it recognizes the income. So you're going to see a change in the profitability of it too. They have actually internalized the management of the company already because Grindrod came with a whole bunch of people working for it. And I think that all kind of makes sense. So it's a bit sad to lose it from the sector. But the big question in my mind is whether it's going to get re-rated now on the back of this, when you're valuing it more on the profits it makes and the earnings per share in a PE basis rather than on the assets. I think it might do. I'm not going to make any predictions though. I think it's just something to keep an eye on to watch. I just think it might be an interesting test case for what happens when you shift from being an investment company to a commercial company. So that is enough from me.